Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. Hope you're doing well today, and if you're new here, every Friday I break down the latest news and the hottest topics in the world of technology and cryptocurrency whilst drinking a cup of delicious coffee. Now in today's episode, we're talking about Bitcoin and Bitcoin's price, as always, Chainlink, PayPal, and of course our usual 404 Logic Not Found segment. But before we get into all that, let's kick it off with questions from the community on YouTube and Twitter. So I'm going to pull those up now here on the computer, and if you want one of yours answered in future episodes, make sure you either leave them in the comments below or tweet me at Hashoshi4. And if you'd be so inclined, please do subscribe to the channel and hit the bell button next to it so you get a heads up whenever I post new stuff here on the channel. Thank you in advance for that, and let's dive into these questions. Now, the first question of the day is Jaleel Golzad. Do you think Bitcoin will get to 20K by the end of this year? In short, no, I don't think we will. I think we just had a nice little bump from, 10.5K and 10.5, 11 up to 13K. And I think that that's good, but I don't think that that means we have enough runway to get to 20K by December 31st. Could it happen? Sure. Do I think it's likely? Probably not. But now that I said that, it probably will happen because I always guess incorrectly on these types of things. But that's really what it is. It's a guess. There's no way to really tell what will happen. And as we know from years past, Bitcoin can make several $1,000 moves in a matter of hours, even minutes. And so it's very possible that we could hit this crazy flag and all of a sudden we go to 20K. So it's possible. I just don't think it's likely. Thanks for your question, Jaleel. The second question of the day is from Mahendar Patel. Can you explain how to participate in testnets? Do we need any technical knowledge, or can a non-tech guy participate in the testnet of any project? So I think that for testnets, it really depends. Some testnets are oriented towards beginners, right? They want beginners to participate in the testnet, and there's tooling available, like being able to use user interfaces to interact with the testnets. But I would say most often testnets are for people that have a little bit of savvy. I'm not saying you need to have programming experience. For example, the Cardano testnet for Shelly, it required you to have some experience or at least some comfortability with using the command line or the terminal and running terminal commands and installing and running software from the command line. So that is a little bit more technical, but it doesn't mean that you have to have programming experience. To get the most out of a testnet, you probably do have to have some experience with tech because you want to use things that are pretty much headless, meaning they don't have user interfaces, and to actually use it, you need to understand what's going on behind the scenes. But again, there are also instances where you're just running a testnet node for, say, an incentivized testnet, like they did for Cardano again for Shelly, or just to run a validator node for the ETH 2.0 testnets. So it really does vary depending on what testnet it is and what the level of infrastructure is around the testnet. But most often, you don't need to be a developer, but you do need to have a little bit of technical savvy and some comfortability with the command line. Hopefully that answers your question, and thank you for your question. I'm going to butcher this name, I'm sorry. Papasu Claudio, I don't know, I'm sorry. Weekly request, could you add a short summary or talk about the token standards on Ethereum? Got some NFTs recently and couldn't grasp the ERC-1155 725 standards. So let me just talk about, in my opinion, the big four. The first one is ERC-20. Those are fungible tokens, meaning each token is exchangeable one-to-one. So each basic attention token or BAT token is exchangeable for another one-to-one because they are exactly the same. Each token is exactly the same. Dollars, fiat currency, are fungible. I don't care what bill I have as long as it's a dollar bill. That's the ERC-20 standard. It's really actually simple behind the scenes. It's basically a mapping of user addresses to number balances of tokens, and it just updates depending on how you send and receive those tokens with some security features built into the standard. The ERC-721 standard is a standard that was created at the time of CryptoKitties, which created non-fungible tokens, where each token is different than the other. So you have a CryptoKitty, but each CryptoKitty, crypto collectible, has its own unique attributes, meaning my CryptoKitties might not be the same as yours, and they'll have different value depending on what attributes they have. The 721 standard basically was you create a contract that can create and hold balances of they basically can create and hold balances of or map ownership of unique tokens with the unique resource identifier or URI inside a contract. So each ERC 721 contract holds a new type of collectible, if that makes sense. Now, ERC 1155 is built by Engine, and their whole thing is, why would we want to create, let's say for a game, you might have 1,000 in-game items. Each of those in-game items would need its own ERC 721 contract. And if there are different sub-items, each of those sub-items would also need their own ERC 721 contract. So it gets very complex very, very fast. And it's just not the most gas-efficient way of doing it. So ERC 1155 kind of took from both 721 and ERC 20 and made this pattern where you could store basically 2 to the 255th power, like an insane number of different token types mapped to user addresses to map ownership. You store most of the metadata or the unique parameters of those tokens off chain somewhere else. And then you can have non-fungible and fungible tokens all in one contract, basically. That's a lot more gas efficient. That's a lot easier to manage because you just have one contract that manages the whole thing. And so I love 1155. I think it's the future. That's what I've been working with the most, and I really like it. I don't know if this was a typo, but you mentioned ERC 725. It's basically a proposed standard for Ethereum identity. And basically that means the smart contracts can be held as sort of a proxy for identity. So you can store claims and attestations of identity within that contract. You can manage your identity contract. You can set up multi-sig within these 725 contracts. And so, yeah, this is the Ethereum identity standard 725. So hopefully that gives you, or folks that are watching that might not have known those things, a good idea of what the token standards are. Great question. So we've got Ben Hindman. Great stuff as usual. Thank you. Curious if you have advice for software engineers who are interested in becoming more involved in the crypto space full time. You're currently trying to learn Haskell and Plutus in anticipation of the Goguen release in Cardano. Great question. I think to become a blockchain developer, what you really need to do to become an engineer in the blockchain space is you first need to understand the fundamentals. Understand the differences between a traditional centralized application, client-server application, or serverless application, and a decentralized application. A lot of times there's overlap. It's like a Venn diagram, and there are components of a decentralized app that are centralized. That's just the way it is. Understanding that, but most of all, understanding the value prop. Where does blockchain or cryptocurrency or both provide value in the context of a solution? If you learn about traditional tech, you can easily find those avenues where it creates value. And so the language part is the smallest part. You can learn a language in many different ways. You can learn many different languages to apply to many different protocols. So the focus should be building useful stuff and designing useful solutions rather than the mechanics of building one, because usually that's the easier part. Designing something valuable that scales and that does what it's supposed to do, that's very hard. So the design, thinking like an engineer, is the hardest part, and that should be the focus. And there are lots of resources out there. Look through open source code, look at existing dApps and see how they've done it, and be problem oriented. That's my advice. So Ben Hindman, thanks for your question. King Lalabella, thanks for your question. What is the benefit of holding Tether if the price holds or hovers at about $1 US? Tether and other stable coins are basically intended to be on-demand liquidity for people when they're making trades. So let's say you're on an exchange, you want to move to cash, but you don't want to move all the way to cash in a bank account, because then to deploy that cash again in a new trade, you've got to pull it from your bank account. So Tether and other stable coins like USDC, etc., those are used for that reason. You can move out of a crypto trade into Tether to basically collect a capital gain or loss. You can do that to sit on the sidelines waiting for your correct trade to open up, right? For the right opportunity to arise. And then you know that it's fixed at $1, so you're protected from volatility, right? So Tether is basically used for that. It's also used in a lot of different ways for different trading platforms as a liquidity meter, or sort of a liquidity lever for US dollars, right? So options and derivatives and all sorts of other things, they need something like a Tether to make these trades work, right? So that's the main reason. For a user, it's basically a place to sit on the sidelines without moving all the way to cash, but knowing that you're protected from the volatility. Granted, Tether has had its controversy, so there's always risks. Bear that in mind. So that's going to do it for the questions today, folks, but let's go ahead and move on to the news section. Now, for those that are new here, every week in partnership with the folks at Cobo who make the awesome Cobo Vault wallet, I'm giving away a Cobo Tablet Plus Steel seed phrase backup device in every episode from here on out on the show. So all you have to do to enter the random draw is to comment on the video, comment anything you want, and I'll pick a winner each week to win one of these. So just for transparency though, the product is only available in the US, Canada, and Europe. So if you win and you're from another region, I'm just going to send you some Bitcoin instead. So bear that in mind. And the winner of last week's giveaway by random draw is here. You can see it for transparency, the random draw winner. Congratulations. Now, I do also want to mention that today's Q&A was sponsored by Centivate, the hybrid network topology project aiming to bring Web3 functionality to the centralized web without re-architecting the core protocols involved. And now that that is out of the way, let's dive into the news. And as we do every week, let's kick it off with good old Bitcoin. And this week in particular has been one, I think, that's been more exciting and more good news for people. People have been happy online. I've been seeing crypto Twitter seems to be in a positive mood for a change. And so we've basically seen one of the more positive weeks that I've seen in the world of crypto since the news cycle over the last month or so has been kind of bad news, doom and gloom for a lot of it. However, more recently, bolstered by positive sentiment, strong support at 10K to 11K, the news of PayPal's bold entry into the crypto world, Bitcoin blasted above 13K this week, emphatically, I might add, which of course threw crypto Twitter into a frenzy of, bullish predictions. And I will say this, I was starting to feel like last week that there was a little bit of room for a jump in price after the strong resistance to bad news that we talked about over the last couple of episodes of Crypto Over Coffee. But I wasn't really expecting this fast of a rise or like a $2,000 rise within a matter of hours. Now, it just goes to show you that you cannot time the market in the Bitcoin world and crypto in general. The biggest price movements towards all-time highs and yearly highs are usually in a matter of minutes or hours, not weeks, days, or months. And my point here is this. If you want to get into the Bitcoin world, but you're trying to time the market to invest big all at once, please change your approach. Dollar cost averaging a little bit at a time over weeks and months is the best way to go. Now, bear in mind, I'm not a financial advisor, nor am I offering you concrete financial advice if I were one, but statistically, you are more likely to do better by dollar cost averaging than lump sum diving into the market at a single price entry. It takes the stress out of it in many ways, it takes the guesswork out of it, and it helps ensure that you are never investing more than you can lose if done properly. So if all goes well, your dollar cost average Bitcoin earns you a nice payday during big jumps like this week's move to 13K. And if it goes down the other way, your losses are spread out amongst a variety of price entries. So it's kind of a no-brainer in my mind to use this strategy. And the key is, of course, to never overextend yourself and try to do too much because Bitcoin and crypto in general can be very unforgiving. And I urge everyone to use good risk management, especially if you're new to the space. And I will say this, more good news is out there if you are looking for it and if you know where to look. It's always quieter than bad news because that's the way it is, but it is there if you find it. For example, Michael Saylor, the CEO of MicroStrategy, reportedly stated recently that Bitcoin is the world's best collateral asset and that the company could be invested for 100 years or more in Bitcoin. And that's pretty big as an endorsement there, and that's positive news, again, if you know where to find it. Now, moving into the world of Ethereum for just a moment, I did read about some statistics in regards to, the growth of the protocol in regards to the Ethereum network and its transaction processing capacity from a dollar value perspective. Now, it does seem like this year, for the first time ever, Ethereum is on track to do almost $1 trillion US dollars worth of value settlement, transaction value settlement, which is unbelievable in my mind, unbelievable. And it's got to be up there with some of the banks in terms of capacity of transaction settlement and dollar value as well. And if anyone has those numbers to really compare, let me know. I mean, if you consider the fact that there's almost $12 billion worth of value locked up in DeFi protocols alone, and billions more having moved in and out of DeFi this year, Ethereum and other protocols are only going to continue to process more and more and more and more value throughout the years to come. Now, I'm really truly curious to see if the next year brings even more volume to Ethereum and if its issues with gas prices are resolved in time to see this growth trend really continue. I mean, that being said, Ethereum 2.0 is years away. And so this proof of work chain that we have now is going to have to be pushed well beyond its current limitations in order to keep growing at this rate. It'll be wild indeed to watch, to be quite honest with you. So we shall see. But it is time for 404 Logic Not Found. And for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise just stupid moves in the world that need to get some attention. And speaking of attention, if you want to help this video get some attention from the YouTube algorithm, please do hit that like button and get subscribed to this video, because it tells the YouTube robots that you are enjoying the content, that you want to see more of it. So I thank you for that in advance. And the topic of today is maybe one that might surprise you. That being said, the topic of today's segment is the one and only PayPal, who have just gotten all sorts of street cred for allowing users to buy and sell crypto on their platform. Now, at face value, this is good news, right? People are excited in the crypto world and even the traditional finance world, cheering collectively that this is a supposedly bullish sentiment. Now, I'd like to present a counterpoint to that excitement or that argument. First of all, PayPal is the exact kind of business that the crypto world has been intent on making obsolete from the very beginning. It's a company that violates almost every single tenet of decentralized technology and user-centric financial services altogether. First of all, according to the reports that I've seen at least, PayPal crypto will be fully custodial with no other options. So you will not be able to withdraw your cryptocurrency to your own wallet whatsoever, forcing you to trust them to protect your crypto and, of course, forfeiting your option to own your own keys. This is not good, to say the least. Secondly, despite the albeit cool feature that allows you to use crypto to pay for services that accept PayPal, they're not the first people to do this. They're not the first organization to do this. And this move just means that PayPal gets to collect more fees in more places, more number of times. Right now, there are a number of projects like UTrust, for example, that are working to make crypto universally accessible as a payment method for vendors and buyers. Various Visa card solutions like Crypto.com and Fold that are allowing users to spend crypto anywhere that takes card payments. PayPal in and of itself is not a hero for doing this. In my mind, the only good thing that comes of this is a wider user base for crypto, basically the marketing and getting people that aren't involved. And that's great. But the problem is it's going to reinforce to all of those crypto newbies that custodial crypto is okay and that that's what you should be doing. You don't need to have your keys. PayPal's got you covered. I don't like that. It doesn't bode well for crypto if that is how new users get onboarded into the space. In my mind, we need to be instilling good practices, people owning their keys. 404 Logic Not Found. And as you might have seen on Twitter recently, Unstoppable Domains just integrated their .crypto domains that live on the Ethereum blockchain with a unique Twitter verification system that allows folks sending crypto to others using their domain to add an extra layer of validation that you're sending to the right person. So using Chainlink as an oracle, the domain that you enter resolves to check if the owner has verified their domain with Twitter, which will show an additional verification message on wallets like My Ether wallet when you type in that domain. Now, if you have a domain already, you should have one free token for verifying a domain with your Twitter account, and then other verifications after that will have a cost associated with them to pay for the fees for Chainlink, for example. Now, to link your domain to Twitter, you can go to the main domain dashboard, select the Verify tab. Then you can start the process by connecting your wallet and initiating a transaction to link the Chainlink node operator network to your domain. And from there, you can come back once that's completed to link your Twitter account with a separate transaction to your domain. So once that's done, if you go to My Ether wallet, for example, you type in my domain, for example, Hashoshi4.crypto. You can see this new verifying or verification message linking to my Twitter to give you additional assurance that you're sending crypto to the right person, that you're sending it to the real Hashoshi. Now, I would love to see this work in reverse as well, where one's private key that owns the domain can be used to sign tweets and the contents of those tweets so that one could verify that tweets came from a legitimate source and that no one was hacked, right? That would be pretty cool, to be honest. Anyways, please do check out Unstoppable Domains in the description below if you're interested in learning more or linking your own domain to Twitter with Chainlink. And again, shout out to Chainlink for providing this type of feature, the tools that they need to do it. Now, I do also want to talk about Chainlink, and we just talked about their integration with unstoppable domains, but I also made a whole video recently about this game-changing feature that the project had been working on, and that was verifiable randomness. Now, this feature is in mainnet on Ethereum, and if you're interested in digging deeper into the feature, how it works, why it matters, and all that stuff, I will link the video up above in the card and down in the description below if you're interested in watching that after this video is over. But in short, verifiable randomness allows dApps and layer 2 solutions to utilize pseudo-random values in their code that are accompanied with a proof of integrity on the blockchain. And all of this is facilitated between off-chain Chainlink operator, node operators, and on-chain smart contracts. Now, the issue traditionally with randomness on the blockchain is that there just aren't many ways to do it transparently and securely. Lack of entropy, lack of the ability to prove where things came from or how they were calculated. And users just couldn't trust it. It couldn't be provably random enough to use for these high-value operations like DeFi. But with robust randomness that's generated off-chain, all types of new functions can be created for dApps and layer 2s, such as randomized airdrops for NFTs, on-chain gaming logic, random assignment of roles in a DAO, and all sorts of other cool things like that. So my hat goes off to Chainlink for bringing this through an audit and into mainnet before 2020 closed, and I can't wait to see the usage of verifiable randomness and then the proofs that come with it in live dApps. It should happen pretty soon. Now, for folks who live in Japan, the good news is that you have yet another exchange option in your country because Kraken, the popular US-based exchange, is now expanding to Asia-Pacific regions with their main exchange product. Now, I've been very critical of Kraken in the past because the fees, they weren't great, the UX was not good, the pairs, they weren't that great, but I have to say they have changed the game over the years. Now, I'd even argue, to be honest with you, that it's my favorite exchange right now, apart from Shapeshift's non-custodial service. I'm just very impressed with it. And why is that? It's because the UI UX has gotten much better. There's lots of new crypto trading pairs that often get updated as new projects come to the forefront. And the golden feature in my book is that Kraken's security model for user accounts is top notch. Not only do they make users implement strong security when they first make an account, the security level of your account is front and center, sort of in this like good, better, best, maximum security sort of ranking on the screen when you log in. It'll tell you what you need to do to get maximum security. For example, you can integrate YubiKey hardware keys to require hardware 2FA for login and transaction operations. You can lock your account settings all together with like a 3 to 10 day unlock waiting period to ensure that if a hacker were to get into your account, they couldn't change anything or do anything or add new withdrawal addresses or bank accounts. Every single thing that they can do to protect you, they've done, and they've given you those tools, and I respect that immensely. And the security model is why I have started using Kraken again, and it's now one of my go-to exchanges. So Japanese investors should heavily consider checking it out when it does launch more and more robust features across the next several months, maybe into 2021, but definitely exciting stuff. Now, in other news, the U.S. acting Comptroller of Currency, Brian Brooks, was quoted saying recently the following about decentralized finance and distributed ledger technology. This is a very, very interesting quote. We see a future where decentralization is very likely an unstoppable force out there. Decentralized networks, by definition, are cheaper, faster, and more resilient than any kind of centralized structure. Now, let that sink in for a second. That's a pretty wild quote coming from a person involved in the big bureaucracy that is currency in the United States. And I will say, Brooks did work at Coinbase's chief legal officer, I believe, before this. So he's familiar with the space. He's proven that he's a believer in the space in doing that. But the most impactful quote from Brooks was actually the next one. And that is, quote unquote, human beings need financial services. They don't need banks. I mean, wow, like that is a serious quote in that it is so simple, but it seems to imply to me that banks, in fact, do not serve their customers and that banks are not the only ones who could provide the financial services that customers want and need. So it's very, very interesting to hear that stuff coming out of folks in government. And I'm starting to see support, in the CFTC and the SEC, in some of the currency bureaucracy with the comptroller. there's starting to be some support for this type of technology. And I think it's definitely an opportunity to see the US start to play some catch up in making this stuff a reality. So that being said, folks, I want to thank you so much for watching yet another episode of Crypto Over Coffee. I really appreciate every moment that you spend, but if you have time to stick around, please do check out my video about the top 3 VPN picks that I love and that I've used to add a little nice layer of encryption to your internet traffic whilst everyone is probably still stuck at home. So I will leave that video linked up here. And again, I wish you and your family a wonderful and safe weekend and week ahead. Thank you so much for all the time you spend on my stuff. And until further ado, cheers. With their main